The guard stock has spoken. Overall, from what we are seeing in the headline numbers, revenues, earnings, gross margins, data center, it looks like at the upper end of people's expectations.
Welcome back to Stocktwits TV on the road, and we are breaking down these Nvidia earnings, and Michael Perrick is here to talk all about it. Now, Michael, you are ex-Goldman. You're the author of the Substack AI Reset to Zero. You've been in on the memory chip story, and if you've been absolutely right on it. Let's get into that first with the framing, the larger framing for this being Nvidia's numbers coming out, revenue blowing past consensus estimates, revenue for this quarter coming in at $68 billion. Data center revenue also hitting a record $62 billion. Guidance, the market already looking at guidance for the April quarter. Nvidia seeing Q1 revenue of 76.4 to 79.5 billion. My goodness, crushing estimates by at least $3 billion on the low end. Some would say, Michael, that this shows that the AI infrastructure ramp is not plateauing. On the contrary, it's compounding.
It's compounding, and it's just scarfing across the wall of worry that investors have had. AI bubble issues, demand issues, Citrini research concerns, software apocalypse, etc. No, the world needs these chips. They're getting the chips. As Jensen said as part of this earnings release, demand is off the charts and sold out. New bumper sticker. I'm going to get a bumper sticker that says OTC ASO. And it's not just the GPI chips, the Blackwell chips from Nvidia, but also all the memory chips from the SK Hynix, Microns, and Samsungs of the world. All the components that go into building these AI data centers are pretty much in short supply for the foreseeable future, for the next year or two. And I'll also add, the other short input is power. And that's one thing that the tech industry does not directly control. And so we need to be watching out for that, because one of the concerns that investors have had in the wall of worry is that, hey, Nvidia ships all these chips, Micron, SK Hynix ships all these chips, but then all the hyperscalers, the cloud companies, the Microsofts, the Googles are waiting for the power interconnects to turn them on, to connect all these data centers and turn them on. That is a concern. We're not going to worry about it today. Today, the news is good. The Nvidia beat the numbers, and the guidance, it looks like it's going to be on the upper end of people's expectations.
Now, let's talk about that gross margin number. It came in as expected, 75%. Do you think that margin is sort of peak Nvidia, or can they keep passing on the memory tax, so to speak, onto those hyperscalers like an Amazon or like a Meta?
And an Apple. I mean, these companies have extraordinary ecosystems in terms of supply chain. And Nvidia, like Apple, is at the front of the line where the chips are made at Taiwan Semiconductor. So they have a lot more flexibility than, let's say, an AMD or any of their other competitors that are coming up, nipping at the heels with their inference chips. And AMD just did a $100 billion deal with Meta yesterday. And so, yes, margin flexibility. Nvidia's margin flexibility is going to be relatively better than the competitors. At the same time, this is still not a zero-sum game. There's enough room for all the players, so everyone benefits, because the demand for AI chips of all types, for training, for inference, for everything in middle, is off the charts and sold out, to paraphrase Jensen Huang. And that is a call to basically cut through the wall of worry.
There's been so much made of CapEx, right? Hyperscaler CapEx reaching something like $600 billion this year in 2026. Are we reaching a point of diminishing returns if the hardware cost is mostly going to memory suppliers instead of, right, NVIDIA's bottom line?
No, well, that's a great question. I would say number one, the money is going to a lot of components. Memory was one of them. And yes, memory as a percentage of the cost of these data centers is going up, but it's still relatively small in the scheme of things. The bulk is still going to the GPUs because you need huge amounts of them. Yes, you need memory on top of that, but memory doesn't take the entire lot of the money that goes on the data center side. However, on the local side, to get into the weeds, memory is for local computers and for laptops. Memory is becoming the highest cost item relative to the other components, but that's a different story. When you look, HP just announced their earnings a couple of days ago, and they said bill of materials on memory is now 35%. It's equal to the GPUs in a computer. I'm getting into the weeds, but you had a great question, and I just wanted to point out that memory as a component of the expenses on the data center side are still a smaller budget item than what goes to the Nvidias of the world for GPUs.
Yeah. I want to mention quickly what the stock is doing in the after hours. Up, it closed a little bit up above 1.4% today, and then it is beating that in the after hours, up around 2% or so on that massive beat, on the massive revenue beat, and certainly the guidance as well. Is the market realizing here that demand might be infinite?
Well, again, being an ex-analyst, or an analyst, I'll say demand is surpassing quarterly concerns in terms of supply demand. In other words, demand is relatively unlimited for the next year or two minimum. Beyond that, I'm not going to say infinite just because these things do go in cycles on a global basis. But for the next 2 or 3 years, where we are in terms of what AI technologies can deliver in terms of kinds of applications. Remember, we're now moving from chatbots like ChatGPT to AI agents like OpenClaw and Anthropic's Claude Code and Claude Cowork. Gemini just announced their versions of it. So all of this stuff simply means that the kinds of things we can do with chips is going up 5x, 10x from a calculation point of view. So we need a heck of a lot more supply of these chips. So analysts and investors who are used to semiconductor cycles in quarters should not worry about the quarterly volatility, for at least for another year or two, is my view. That this is a secular turn. I'd love to see it infinite, to use your words, but I think we can see runway for the next couple of years at least. That is relatively clear.
We already know that Nvidia is the biggest, by valuation, the biggest company in the entire world. Are we going to see a valuation ceiling on Nvidia simply because, and Jensen's effectively saying that they're sold out through 2026? Are we going to see a valuation ceiling on this company because they just can't buy enough memory to grow faster?
Not necessarily. Let me give you a couple of views on that. Number one, remember the 2026. He's talking about 2026, but investors and analysts are also already going to be focusing on 27 and 28. The chips that are coming after Blackwell, the Rubin and Feynman in the next 2 or 3 years are off the charts more capable. And investor attention is quickly going to move to those chips and their supply and demand. So, and the demand on an absolute basis is going to be, again, a lot more growth relative to what we've seen last year, definitely this year. We'll see what the guidance looks like when they talk about it on the conference call in a little bit. But no, 27, 28, you've got the OpenAIs of the world and the Anthropics of the world already pre-prepping their IPOs with numbers that go to 2030 in terms of their revenue expectations, their capex expenditures, etc. It's very easy to extrapolate from there to what Nvidia, which is a company that is actually selling the pickaxes and the shovels to all these companies.
Yes.
Their economics are a lot more comfortable for a lot of investors. So no, this does not necessarily cap anything. It just augments the story and augments the understanding of the narrative and put more color on the growth trajectories ahead.
Does let's talk about how this could impact, and we already know, right, that this is the biggest value, the highest valued company in the whole entire world. How is it going to impact the rest of the sector? We've talked about the AI pain trade. We've talked about the SaaSpocalypse, so to speak. Jensen called the sell off in software stocks the most illogical thing in the world, but that didn't really stop any fear-based selling, Michael. It spread, in fact, to wealth management. It spread to real estate services. We saw it in logistics even. Do you think
Go
that
ahead.
this helped boost sentiment across the AI trade?
I expect sentiment to be very volatile. Again, I started off this discussion, wall of worry. This time, whether it's mainstream users of AI, institutional investors in AI, everyone wants to worry about stuff. Everything from, oh my God, AI will kill us because we watch too many sci-fi movies and Skynet and so on, to, oh my God, this is going to take away all the jobs. That is, in my view, totally the wrong thing. We are going to look back and forget Citrini Research's 2 years. In 5 years, when we're going to say, what were we thinking? That this stuff was going to basically not need humans to continue to build with these tools and do amazing things. We are going to end up needing a lot more people than we think, especially coders, especially people, white collar, across all these segments. So no, I disagree with software apocalypse. I agree with Jensen. These are high volatile markets because everyone wants to worry about this. Why? Because we've seen many tech cycles before, and we've seen the volatility, and nobody wants to make the mistakes again. No one wants to overbuild for the internet like the internet did in 2001 and 2. So everyone's trying to avoid that, but they're being too smart for their own good. The core thing is they need to understand bottom up what these technologies are capable of. Why are they so interesting? What they allow regular people to do in every vertical, in finance, in healthcare, in energy, in all of these industries. And yes, the existing companies are going to need to adjust some of their models sometimes, and there'll be lots of up and downs. But overall, the directionality of this is still up and to the right.
We're seeing some quotes from Jensen sort of trickle out on the day of their earnings. Of course, the earnings call happening today after the bell. He's saying, quote, computing demand is growing exponentially. The agentic AI inflection point has arrived. It is here. What is your takeaway from him saying, people, we were at the CES in Las Vegas, and agentic AI certainly was on the lips of just about anybody in the space, but it was seen as something still in the future. He says it is now.
It is now because the technologies are becoming a little bit more practical and usable. So the agentic AI of a year ago, what Agentforce was from Salesforce, they also reported numbers. Those were premature. They were technologies where the story was ahead of the reality. Now we're finding that the agentic versions of the software, and the biggest example of this I can give you is Claude Code from Anthropic, which was literally a piece of software that was introduced a year ago. Today, it is probably one of the fastest growing productivity apps for coders today, millions of them, that is going to that went from zero to multi-billion in revenues. And that is the agentic stuff that he's excited about. Those are the exponentials. The exponential growth, humans, we can intellectually understand exponentials. Exponentials are not part of our daily life. And that is what Jensen, I think, is pointing to. And for him to be using these big words today means that he's got a lot of conviction, that he's seeing it from a bottom up, because Jensen, of most of the CEOs, is the least prone to use hyperbole, to get ahead and be over bullish in terms of the words he uses. So when he uses words like this, to me, it adds additional value than most other CEOs, because he tends to be more conservative in how he uses these kinds of words. So when he's saying there is agentic AI demand for real on a bottom-up basis, I'm going to give it a teeny bit more credence. I'm going to listen for what else he says on the call. I'm going to do a lot of more bottom-up analysis out there. But agentic AI is starting to see traction. And the other example I'll give you on this is the whole business with OpenClaw just in the last month or two, which just got acquired by OpenAI. And those are horizontal open source AI agents that people can do a lot more interesting things than even with some of the agent AIs that have been talked about on the enterprise side from the Salesforces of the world, the Microsoft Copilot stuff, etc.
Thank you so much, Michael. Everybody check out his Substack, AI Return to Zero. He wrote some amazing pieces, fascinating pieces in November and December. The memory chip supply constraints and price hikes, a major AI headwind ahead, and memory ramping up as the next big AI bottleneck. And he was correct. Memory stocks have ripped since then. So he's a guy that you have to listen to. And thank you so much for breaking down NVIDIA earnings in real time for us, Michael. We'll see you soon.
Thank you so much.